Welcome to Trade Pro. In this video, I'm going to show you the only strategy you will ever need to catch tops and bottoms the right way. This strategy is simple so anyone can understand it, but it is also very powerful. The strategy combines three elements: the RSI, market structure breaks, and a multi-time frame exponential moving average. I'm going to explain why it's so important that you trade reversals this specific way and not the traditional way that ends up getting you caught on moves that keep going against you. So let's get into it and break it down. Before I break down the exact rules of the strategy, there's an extremely important thing that everyone needs to understand when it comes to reversal trading, and that is in a bear market or a downtrend, there's no such thing as oversold. And in an uptrend or a bull market, there's no such thing as overbought. So you need to stop trying to catch reversal trades going against the main bigger picture trend. That is why with this strategy, there is a 4-hour time frame, 200 period exponential moving average to tell us what direction to trade in. So this is a 4-hour time frame, 200 period EMA, and I'm on the 30-minute time frame. This is our guide that tells us what the trend is because we only want to trade in the main trend direction. So that's extremely important with any strategy, and especially if you're going to be a reversal trader, you can only reversal trade if it's going in the direction of the main bigger picture trend. So only shorts when price is under the 4-hour 200 EMA, and only longs when price is over the 4-hour 200 EMA. All right. Now the next thing we have is the relative strength index. Just basic settings, 14 period, not too much to talk about there. And the last factor is market structure breaks, which we're going to have to break down a little bit more so everyone can understand it, because market structure breaks are the hardest part of this strategy to understand. So I'm going to go through a bunch of examples and break it down for you guys. Here are all the rules to the strategy broken down very simply. So the first rule is with the EMA, the price is under the EMA, you can only short. Price is over the EMA, you can only long. The rule number 2 is RSI has to reach overbought to short and oversold to long. Rule number 3 is the RSI needs to have bearish divergence to short and bullish divergence to long. Rule number 4, market structure needs to break in your favor. And rule number 5 is enter the trade with a stop loss at swing low / high and profit target at 2 to 3 times your risk. So let's go through a bunch of examples now of all these rules being met, and so you can get a good idea of how this strategy works. Trade example number 1, let's break it down step by step. Starting with rule number 1, which is making sure we're trading in the direction of the main trend as determined by the EMA. So prices under the EMA, we're only looking to short. Now, next thing we need to see is RSI go into the overbought condition in order to short, which happens right here. And the next thing we need to spot is bearish divergence, which means a higher high on price, but at the same time, we get a lower high on the RSI. So you can see that is present. And then the next thing is the market structure break going in the trade's favor. So we're looking for a bearish market structure break. And this might be confusing to some people who have no experience with market structure, but think about market structure just like this. It's simply the higher highs and higher lows, or lower highs and lower lows. So as price is moving, you can draw them in as they occur. So we get high, higher low, higher high, we get the higher low, higher high, and the market structure is broken when this stops happening. We stop getting a higher low at this point over here. Price fails to make a higher low and a new higher high, and it simply falls off. This right here is what we're looking for to get in trade entry. So this would be the short entry, and stop loss would be placed just at the swing high here. And there's a few different ways that you can do the take profit target. So One is very simple, where you just target a strict risk to reward ratio. So you can just go for a 1-to-2 risk reward ratio, or you can do something different and try targeting the lows of this pullback that you have shorted. The expectation here is that this is going to be a continuation down to new lows. So you can target the lows over here and give yourself a much better risk to reward ratio a lot of the time. So up to you how you want to do that, but make sure to do plenty of testing to determine what is going to be the most effective way to set up your risk reward ratio. But anyway, let's move on to a few more examples, both shorts and longs. Here is a long example. So we can see that the price is now above the exponential moving average. So we're only going to look for a long. We next need to see that the RSI goes oversold, which it does so right here. Then we need to find our bullish divergence. So we need to see lower low on the price, but at the same time, a higher low on the RSI. Next, we need to figure out our market structure break. So how I see it is we have this lower high right here, we get this lower low right here, and then we're waiting for the market structure break right here. So this would be the entry point where you would be able to take a long position and place the stop loss below the swing low, and we can target 2 times the risk, or we can do just the swing high over here. So that would be right here. That would give us a 2.6. So you can figure out the best way to do it. Another way that is going to be much better for the actual entry point is when you get this market structure break, typically there is a pullback after the market structure break. So I would recommend trying to get a better entry than just entering right away when it breaks the market structure. I'd recommend entering on the first pullback after the market structure break, but for simplicity, I'm just keeping this strategy where I'm going to demonstrate it where it's entering right at the market structure break. But again, I recommend entering on the first pullback after a market structure break. Here's another short example where I'm going to cover an important method of moving the stop loss to break even. So we can see price under the EMA, so we're looking for a short. Then we see that the RSI goes into the overbought and we get our bearish divergence. So higher high on the price, but a lower high on the RSI. Now we need to get our market structure break, which occurs right here. So we get that market structure break, we get our entry, we get our stop loss up here. And essentially what I want to talk about for this one is how you should move your stop loss to break even. What I recommend doing is if price goes in your favor, consolidates, and then breaks out of that consolidation again in your favor, that is the right time to move your stop loss to break even. So what I mean is you have the entry over here for the short. You see price moves in your favor. There's a consolidation, and then it breaks out of that consolidation again in your favor. So at that point, it's a good time to move the stop to break even and continue targeting your original profit target. All right. So protecting your position so that your winner doesn't turn into a loss. All right, final example here. This one's for a long. So we see price above the EMA, and then we're looking for our oversold on the RSI, which happens right around this area. And next we want to see that bullish divergence, which we get big time here. So strong bullish divergence on RSI. And next we're waiting for our market structure break. Now this one is interesting because we have such a far away market structure up here. If that is our lower high, this is our lower low. And that means that the market structure break doesn't actually occur till all the way over here. But that doesn't mean it's not valid. You can still enter. And this also kind of goes to show why it's important to have a good method to move your stop loss to break even. So if you have your position right here and your stop loss is down below, and essentially you get this consolidation and then strong break out of it, in my opinion, it's better to move your stop loss to break even at that point and just take the break even loss on that trade. This one actually does end up, being good if you had moved the stop loss to break even, because it goes into quite the downtrend. So that is the last example. And as I was saying, there's not just one way to do this. You can do it where after the market structure break, you enter on the first pullback after the market structure break, and you can set your stop loss different ways. You can do take profit targets different ways, moving the stop loss to break even different ways. There's not one way that this is, the only way to do it. So work out what is going to work out best and practice. Very subjective topic with the market structure breaks. So, it's going to require a lot of work. Don't think it's going to be easy. Definitely paper trade and test a lot if you ever want to trade, especially with this style of strategy. But done right, this can be very effective. Thank you guys. That's it for the video. Hope you have a great day. Thanks for watching.